Have you always wanted to invest remotely into the amazing real estate market that is Hawaii? On today's show, we're actually going to meet with someone who has done that and done that well. Welcome to today's Hawaii Real Estate Roundup. Hey, what's happening, everybody? Today, I'm super stoked to have this gentleman on the show with me, Mr. John Dang. Good to see you, buddy.
Good to see you too, Hal. Thanks for having me on your podcast.
Absolutely, man. Absolutely. So a little bit of context for our audience. John Dang is a real estate investor from the U.S. originally, but has built an amazing portfolio that spans from Europe to mainland U.S. to Hawaii and Asia. And I've really been, first of all, it's just been a pleasure as we've gotten to know each other in the last few months, John, working together. Secondly, just to see you're firing on all cylinders, man. Not only are you invested, well in the short-term rental space and the long-term rental space, but you're also really hitting on all cylinders from a social media standpoint, which I absolutely love, dude. So I'm super excited to have you on. With a kickoff, tell us a little bit about yourself, man. Give us a little bit of background on John.
Yeah, without boring you to death, I'll try to make it quick. So I moved out of the U.S. in 2010. I started living in the Philippines for work. I started my own business, started my own real estate platform, something like a Zillow for the Philippines. In 2016, I eventually sold that company. It didn't do too well, so we ended up exiting to a competitor. And then in 2016, I bought my first property here in the Philippines. And I was 39 at the time. And had always dreamed about owning a home. And at 39, I bought my first property here, bought a condo here, renovated it really nicely. And this is the place I'm in right now. And then I decided, hey, you know what? Let's take a look at property investments overseas. At the time, I didn't really have intentions to live in the Philippines forever. So I thought I'd maybe go back to the US or maybe explore Europe or South America somewhere. So I was like, I had this dream, like maybe I can do this and live around the world. Wouldn't it be an amazing dream to go surfing in Hawaii or Portugal or in California or maybe Bali on certain seasons and then go skiing in Lake Tahoe or in Japan in other seasons? So I said to myself at the time, I wanted to live a lifelong vacation, right? And be able to do all the things I'm really passionate about. And so I started buying up vacation rentals in different locations. The last big property I purchased was in Hawaii, actually, and that's how I got to meet Hal.
Yeah, man, that's incredible. And Portugal, Tahoe, Hawaii, Japan, Philippines. Tell me about which one, where was your first overseas? Was it Portugal or was it Tahoe, or which one was your first?
Right. Well, I guess my first was in the Philippines, but I was living here at the time. And then I decided at the time, Portugal had this golden visa program. And I was like, great, freaking hell. Portugal had great surf, great weather, good food.
Really? Yeah, I didn't know they have good surf in Portugal.
Really? Yeah, it was, Nazaré, which is the biggest wave in the world.
Oh, you know what?
Right.
That is the most famous of all. That's right. Right. Yeah.
I would say in Europe, Portugal is probably the top surf destination.
Okay.
Yeah. And so at the time, I didn't think Hawaii was a possibility, actually. So at the time, I was looking for cheaper alternatives than U.S. properties. And, I bought two houses in Portugal for a little bit over 500,000 euros. And qualified for my golden visa. And one of those houses was in a surf destination, probably the most popular surf destination in Portugal, called Ericeira, which is only 30 minutes outside of Lisbon. And then the other one was a historic apartment in Porto. And those investments have done really well for me. That was my first.
Okay. And then you just got the taste and you just started just taking deals down left and right. Yeah.
Yeah. Kept going and then, yeah.
Well, incredible, man. Well, we I want to talk about Hawaii a little bit here. So you picked up a nice multifamily on the North Shore, which is a beautiful property. The location on it is incredible. I've been privileged to get to know you through managing it and working it for you. Tell me about the process with that one, because you bought that one in 21, 22.
I bought it during the time. It was funny because I bought it during the time when interest rates were pretty high. But during the whole COVID period and that whole crazy cycle, real estate cycle in the US, I had probably made at least 12 or 15 different offers and lost out on to other cash buyers or whatnot. So it was super competitive. And then I met a friend here in the Philippines. I was at the gym and I heard him over talking. He had vacation rentals in Big Island, near the volcano, and he was sharing his numbers with me. And I was just like, wow, this looks incredible. And then he actually packaged a deal for me to look at, and he was going to manage it. And I was like, I'm going to go get on a plane tomorrow. And essentially that's what I did is I got on a plane and headed over there.
Wow.
And then we went to check out the property, but then I was at the volcano. I was just like, I can't see myself here.
Yeah.
I can't see myself really hanging out here.
Yeah. It's a special spot up in the volcano. It's unique because it draws people from around the world. Everybody wants to know and see an active volcano and experience that. But, you're sort of in a rainforest. You're sort of up in the higher elevation. So it's not like the typical Hawaii climate that people are used to. And then it's sort of one of those, at least up in that area, up in like Volcano, or as the community's called, or Mountain View. It's more for like guests that come in, they'll spend 2 to 3 days there. They'll go to the national park, they'll get their fix, and then boom, they're on to the next one. And those things do really well. In fact, one of the keystone properties that they've featured on Airbnb is up there in that area. It's like one of those dome type of things. You know how they're always kind of changing their front page, but they've had a splash page has been one of those properties that have been up there. But yeah, you're absolutely, I agree with you. I should say that it's cool for the revenue and for the entry and the parks and the volcano and stuff. But yeah, it's definitely its unique flavor.
Yeah, he was doing really well. I mean, you're right. They do quite well. They're booked out year round. The properties aren't that expensive there, right? Possibly because, you never know when a volcano takes your land, right?
Right.
So there's something about that, right? And so it's hard to get, you're hard to get like insurance, but it's also, if you bought on the side of the volcano where I guess it's opposite of the lava flow or something like that, because it's an active volcano, right? And so at any time it could be shut down because it's erupting or whatever. And so, but if you bought in a certain side, you're able to do this and you can run it as vacation rentals. But I also thought the problem with that too was the resale value and the appreciation of that would be, the exit would be challenging too. But, as I was there, I'd always had heard of the North Shore, and I remember, like when I was a kid, I watched the North Shore, the surf movie, and that was one of the movies that stuck with me as a kid. And so that was always legendary to me, right? And so I was like, let me just do a Zillow search on this, and there was a house in front of Sharks Cove that was listed as 7 units, and it was, at the time it was like about 2.7 million. And I had just gone through all these property searches and offers that I lost to, right? And I was just like, wait, is this really on the market? And I called the list. So what I did was I called the listing agent instead, because I had, lost so many deals. I made sure I contacted the listing agent and said, make sure this deal goes to me. And sure enough, she was like, get over here now and get this in escrow. And we got it in escrow as soon as possible. On the island of Oahu, there's not many places you can do short-term rentals, right?
Yeah, the rules have changed a lot since you bought it. Actually, they've changed. Yeah.
Has it changed again? Because when
No,
I
no, no, no,
bought it,
no, no. But
okay.
I think right as you were in buying it in 21, 22, there was a bunch of turmoil in the market.
Right. So I think the interesting thing is the owners before me ran it as short-term rentals. And I don't know if they were supposed to do this or not, or if they were allowed to do it, but they were making somewhere like, I was looking at their number, they were making between 80 to 100 grand a month running this as short-term rentals. And I was just like, holy cow. But I did the numbers with the expectations that I wasn't going to do short-term rentals, that I was going to be able to rent it for 30-day rentals. And at the time, we had just gotten out of the COVID period, right? And so there was a lot of remote work. There was actually a growing demand for 30-day stays or midterm stays. We did the numbers and it penciled in. And even with my interest rates, I got a terrible interest rate. It was 8.5%, $15,000 a month mortgage. It still penciled in. And so I said, okay, worst case scenario, we'll break even on this if we did it on long term, maybe we'll make a little bit of money. And now midterm, we'll definitely make some money. And if we ever had a chance to short term again, we would totally crush it, right?
Yeah, and it's been remarkable because I kind of took over and took it to the long-term level for you. And it's been, it took a little bit for us to get that engine rolling, but it's nice because it's fully rented now. We have one midterm up there that's still available and working, but it's been awesome to see what you've done with that place too, because it's an amazing, amazing property. And honestly, it's a pleasure and a joy to work with you on that project too. It's really
likewise. I will have to just tell everyone this, man, it's a pain in the ass to manage to manage properties in Hawaii, whether it's midterm, short term, or even long term. It's a serious pain in the ass because we're up in the North Shore. And for some reason in Hawaii, for people to drive from Honolulu or all the way around the island, it's like, it's death, right?
Yeah.
It's like, dude, you're driving down the coast around the island, and a small island, it's going to take you 30 to 40 minutes. And then here we're living in the Philippines, and it's like, Makati I can see Makati. It's literally like 1 or 2 kilometers away. It could take half an hour. So you have those challenges in Hawaii. Trying to find vendors and property managers to work with you is quite challenging. So, working with you was really a breath of fresh air. And, just having someone like you who is tech savvy, who can communicate with us on different time zones, or even is on a group chat with me and my team. That's huge, just being updated on the property and having that clear communication. Like, you've won the battle right there, And so I would definitely say, you're out of, and I've worked with a lot of property managers, and I've fired a lot of property managers. And you're probably one of the best property managers I've worked with, Hal.
Wow, man. I really appreciate that, John. That's a pleasure to hear. And it's a pleasure to work with. Honestly, it's clients like you that make our job, it makes it so fulfilling, because we can and are sometimes selective with clients, but you're just an incredible part of it. Yeah, you're an incredible part of the business. And so I appreciate you saying that, John. In fact, I think I want to segue for a second and introduce, if you don't mind, my business here. We've actually gone through a rebranding, and we were HPA Management, and we still are brokered by Hawaii Property Advisors. But if you are looking for Hawaii Property Management, Hawaii Coastal Property Management, that's my company, brokered by Hawaii Property Advisors. We have over 15 years managing real estate assets here. We really do focus on excellence. Communication is the biggest part of it. We also do Airbnb Superhost. We have over 500 5-star reviews, and we do everything. We do long-term, mid-term, and short-term as well. And so we're growing, and it's awesome to be. But I appreciate you for calling us out, my friend, because that's what it's all about is building and growing our business. And so appreciate it, man. So tell me a little more about your social media presence. One thing I've loved about being, working with you is watching you on Instagram, watching you build your community. Tell me a little bit about your social media presence and how you're using that as an investor to build and grow your business, man?
Yeah. So like we just started posting social media content since February. And now we have across platforms, we have over 70,000 followers. So it's grown quite fast.
Did you start from zero in February?
Yeah. Zero.
Wow.
So we started with like a page that was completely blank because at the time I wasn't very confident. I thought it was kind of cringy to post this type of content on my friend's page, right? So I was like, no, I don't want anyone to know about this, right? So I was like, okay, I'll just post this quietly, and if it gains traction, then I'll let people know about it, right? Yeah. So I wasn't very confident about it at first. And so the reason why I did it, and often people always ask me like, what are you selling? Are you selling properties? They think I'm pushing a property, but I'm not. I'm actually just talking about it from an investor standpoint, especially someone like me who's bought properties in different locations, different countries. I had a little bit of a different perspective, right? Like, how do you know if your US market is better than another market, right? Like if that's all you know, right? So like people in America, they don't really, they tend to invest in their backyard in the US. They don't invest abroad. But if you're like a wealthy Filipino or even a wealthy Japanese or these people from these countries, they do tend to be a little bit more open-minded and investing in overseas. Like you'll see a lot of Japanese investors invest in Hawaii, for example.
Yes.
And so like they're a little bit more open-minded and savvy about different markets. But even then, you know, they hadn't experienced all the different markets that I have, right? And so I was doing this I was going in and doing this on my own, right? And it was quite challenging, Hal. Like imagine going into a new market, like 8 or 9 different markets. And every market you're going into, you have to build a whole new network. And you know how important it is to build the right relationship with the right real estate agents, right? To bring you the best deal, the right deals, and someone you can trust. Then the people that you need to contract to like renovate or build whatever you want to do, guys you need to manage your properties, and let alone, you know, you got to go there and make friends, right? So it was challenging, but I loved it because every time I did this, you know, I learned so much more. I got to grow as a human being. I got to do and learn new things. I got to learn how to ski. I got to learn how to ride motorcycles and fly planes and drive a boat, whatever. Like I just got to grow as a human being. And I got to learn so much about real estate investing. So I thought, well, you know what? Why don't I share this? Because at some point, I really can't do this alone anymore. And I thought my end goal was this. Well, one day, I'm not going to just buy multifamily homes. Either I'm going to stop right now and retire because this is already too much for me to handle, or I keep going and I start doing bigger and bigger projects. And at some point, I want to buy bigger and bigger buildings and I want to scale this out. Or I want to, like, because I have a management, I also do property management on my properties too. And I co-host with you, right? And so as I'm building out my team, now I can bring on other investors and scale. And maybe the end goal would be, hey, if they trust that I know what I'm doing, and just by me sharing my experiences, my failure, my successes, if they trust that I know what I'm doing, maybe they'll co-invest with me too, and we'll do these projects together. Yeah, and that's already happening now. So that was really the whole point of it, and that's why I did what I did.
Well, your content that you put out is top tier. Your Instagram is John Dang 808. Is that what it is?
That's correct.
Okay, we'll put a link below because I want you guys to go check this gentleman out because you're just crushing it. You know, you're doing reels. I mean, I've gotten inspiration from a lot of the stuff that you're doing. And you started from nothing in February. Here we are, 8 months later, and you're almost doing 10,000 new followers every month is where you're going. So, I mean, it's just going to, I don't even think you've hit the hockey stick yet, man. I think you're going to continue to grow. And what I also love is that you're also building a community that is highly engaged. We were talking about it before the call. You started a Discord community. That Discord community, I love being a part of it. I mean, I've done a few things here and there, which is fun. I love it. And I'm actually looking forward to more from that. But tell us about that Discord community and what is that all about?
Yeah, and I'll be sure to share the link with you on that as well, if, in case anybody wants to join. The Discord community is a way, really, for us to continue the relationship with people after social media, because I was getting tons of inquiries and I couldn't even answer. Like people asking me for consultation, people asking me just to talk to me, people who want to pitch properties to me, and I said, you know what? Why don't we just bring them all together on Discord? And they can even present the properties to me on Discord,
Yeah.
and not just to me, but me and my whole community. And same with you, Hal, because I want to look at more properties in Hawaii. Why don't you
Yeah.
present this to me in Discord, and as well as my other potential investors, and we can all ask the same questions. So we're all kind of like sharing knowledge by doing that. And then for you, instead of you doing a property viewing one-on-one, you're doing it across 10, 20, 30 people, right? And I know these people are highly engaged. They're super curious about this, right? Sometimes we try to help people invest in Japan, for example. So we have a lot of people interested in Japan because that's my next investment thesis. I've been buying properties in Japan. And so I've been promoting that. And we've been trying to help clients meet the right agents, get connected, learn the market. The hardest thing for someone like me to go into a new market and buy a new property is to spend enough time there to get to know the location and the market. You know your market. You know your market like the back of your hand. But if you're going in a new market, if you're coming to Japan, how do you know a good deal from a bad deal? Where do you know where to start? What do you know what you want, right? So we thought, okay, why not use this as a channel to present as many properties as possible, and then let them ask questions, let them find out all the ins and outs, not just from me, but from other people. So it's not all dependent on me now. It's dependent on the whole community pitches in now. And so why not be able to look at properties in Hawaii? Hal, you want to see properties in the Philippines? Maybe you want to come back and live in the Philippines one day, right? Or Japan, right? So why not see what's out there? Yeah. And you have channels for that, and you can check out properties, and we even help investors underwrite the properties. We do. I'm big on numbers, and you are too. And that's why I like you too, because we are actually like crunching numbers on this property, trying to estimate how much money we're going to make, how much money we're going to lose, or what our risk was. And we do that for our investors. We post that and present that. And in a way, it helps educate everyone too.
I know you alluded to it earlier. U.S. investors don't always have that appetite for going abroad. For you, it was, you jumped right in, bought, I think it's really smart to buy in Portugal like you did, to qualify for the overseas, or the golden visa, as they like to call it. What would you say to other U.S. citizens like yourself that are like, let's face it, there are pros and there are cons to buying in the U.S. as well as abroad. And like, say somewhere for Japan. Japan's a difficult market if you like you said, if you don't know it. What would you say would be like the mindset shift that someone would maybe need to do if they were a US based investor and they were looking to diversify, looking to get overseas or get abroad? I guess first of all, mindset, and second of all, it'd be like maybe some top 3 market profiles that you would help to identify for one of those types of people.
Sure. I think with American investors, let's take a look at why you might want to look overseas, right? First and foremost, that really kind of opens up a lot of possibilities, right? So in the U.S., we might be in a bear cycle right now. You can argue that we're in a bear cycle, or I don't know, but we definitely do go through the ups and downs, right? And so by opening it up to different countries and seeing if you are able to invest in different markets, now you can strategically pick what's the hot market, right? So sometimes you can time, Japan might be a good time to get in, or you can argue that, another market might be good to get in. So it definitely opens up the possibility, right? The other thing is, like, a lot of people from different countries, they are always looking for a safe haven. right?
Mm-hmm.
And I think the US is starting to open their mind up to that more and more as people are starting to look to invest overseas and looking for safe havens or looking for second passports. That's becoming a big trend in the US for whatever reason, political reasons or whatnot. Like, I think people are much more open-minded to it. In Portugal, for example, we've had the biggest influx of Americans more than ever. And so that's probably because of all the political stuff that's happening in the U.S. So I think Americans haven't really had that mindset to look for that type of second passport, second home as an option, kind of like to de-risk and diversify your assets as well. And I also have a place to kind of park your money somewhere else other than the U.S. Right? I think that's more common for people outside the US, right? Like a lot of people in China, for example, have really, like a lot of Chinese investors have really gone outside of China and bought up properties everywhere. Like we talk about Vancouver all the time, for example. And there's so many pockets around the world, and that's happening in Japan right now. Chinese buyers are, because they don't trust their own government, and they don't trust, they can't own land either. So there are a lot of better real estate markets like the U.S. for these guys. So they're used to it. Americans aren't as open-minded to it, but I think that's starting to change. But obviously, there's a lot of challenges that comes with that, right? So
the IRS being one of them, ironically, it's very difficult to move capital out of the U.S. You really need. Do you know if any of these Asian companies or countries that you've been investing with, like Japan, for example, or the Philippines? I know the Philippines. I'm actually very bullish on the Philippines right now because of their economic. I think they're on a pretty powerful bull cycle right now. The infrastructure investments, it's amazing. U.S. citizens have no idea what's going on in the Philippines right now.
Right.
It's just incredible.
You touched on it too. There's so much upside on these developing countries. The U.S. is considered a developed country, but when you actually take a look at the infrastructure in the U.S. versus Japan or China, we're way behind, right? But it's still considered a developed country. Everything is quite expensive in the U.S. relative to the rest of the world. But like, there's so much upside on different markets around the world. And if you're an American investor, we've gone on like pretty crazy bull runs. It might be a while before we see that type of return anytime soon in the U.S., right?
For sure. One of the things that's always sort of incentivized foreign investments to come to the U.S. is the green card / passport that has attracted, like I've had clients that have specifically invested for certain visas, like I think it's the HB1 or the HB5, something like that visa. It is basically, it's in order for them to help gain citizenship. Now, similar to what you've done in Portugal, I'm curious. I don't know if the Philippines has anything like that, or Japan or Thailand or Vietnam or Indonesia. Are there any Southeast Asian or just Asian, countries that are doing any sort of like tax incentives to attract those outside dollars? Are you aware of any projects like that at all?
Of course. Yeah. About every one of these countries has some sort of program. What I think people don't realize is countries actually compete. They actually compete for your dollars. They're either competing for, like in Japan's case, they're competing for migrant workers because they definitely need it. They have a declining population. Or they're competing for high skilled labor, like tech talent, et cetera. Yep. Or they're competing for investor dollars. Like Europe has been doing that as a big strategy with their golden visa investment to help kind of boost their economy and bring in capital and bring in liquidity into their market, which actually did wonders for Portugal, because Portugal was also a declining population. They went through a huge hit during the 2008 crash, right? And so a lot of these Southeast Asian countries are also opening up visa programs, and not necessarily by investment. You can actually for me, I just deposited $20,000 into the Philippines I had my retirement visa. But they've upped it now to like more than that. But there's a new program that's coming out for 75,000. But there are programs in Thailand that are way cheaper. You just have to show enough money, and they want you to come here because they know you're going to add liquidity to the country, right?
Yeah.
And so there are countries competing for you, right? As long as you know, especially Americans who are going to be the wealthier population. So there are plenty of programs out there.
That's interesting. Okay, good. And then we also, obviously the exchange rate factor is good, which I think for Japan is a pretty solid, attractive. Do you feel like the exchange rate is contributing to that in Japan and making, I mean, there's a lot of factors that play in Japan, but do you feel like the exchange rate is part of it?
It's one of the biggest one right now, right? Because I mean, you think about it, like a couple of years ago, $1 million house would cost you about $650,000 right now, right? A $1 million condo would only cost you $650,000 because their currency rates have dropped so much relative to the dollar and other currencies. And we're expecting that to turn around. And the reason why that currency rate, that spread happened was because the rest of the world is fighting inflation, right? So Japan's been printing money for the last, 20 years, and they haven't seen any inflation, right? In fact, they've been trying to tackle deflation, and they've been trying to see a 2% inflation. So they have had to keep their interest rates low, and they continue to do so. And then while other markets around the world are fighting inflation and raising interest rate, that interest rate gap is creating the currency gap. Valuation gap. So that gives you an opportunity. But we know that U.S. is going to eventually have to lower their interest rate, right? And so when they start lowering the interest rate, all the other countries lower the interest rate, that gap is going to narrow, and the yen is going to gain strength again. I don't think it's going to be the situation where you're catching a falling knife with the yen, unless the rest of the world just goes into hyperinflation. Then that's a whole nother matter, right?
Yeah. But now the getting is good in Japan right now, so to speak.
Right. And the property market is going strong right now, and especially in central Tokyo and central Osaka and particular areas where the population decline isn't an issue. And if you just focus on the right areas, you're not going to see, a decline in value. You're not going to see depreciating assets if you choose correctly. But yes, Japan is going through its issues. It's going through its declining population, but U.S. is kind of going to get there soon. And then Spain and Europe, and there's many countries in Europe that is worse than Japan, by the way.
Where do you feel in Southeast Asia is one of the, I mean, Japan's not necessarily considered Southeast Asia, but more in the Asia Pacific Rim or Southeast. Where would you say would be, in your opinion, what would be one of the better countries to focus on right now, in your opinion?
In Southeast Asia, I like Indonesia, in particular Bali for foreigners, and Philippines. I think those are the two Southeast Asia. I like Vietnam too, but like ownership rights. It's a communist country. There's the stability factor. You can buy condos in Vietnam. Again, it's leasehold. You can buy condos. You can buy in Bali too, but it's also leasehold. You can't own the land if you're a foreigner. And the same thing in the Philippines. You can't own the land if you're a foreigner, but you can buy a condominium, for example.
So are you doing any, in those countries, have you done any, have you bought in Bali? Have you invested in Bali at all or no?
I've always wanted to, but I think I'm going to pull the trigger. I've done some research, and one of the things that I actually researched, I actually have this, I haven't published it yet, but one day I will. I actually do a top 50 global market, and I rank it based on a couple of different factors: investment potential, tourism, government stability, and lifestyle. And within those factors, like lifestyle or tourism, foreign friendliness is a very big one. And so if you're like me and you're an expat who's lived around the world, it's very important that you choose places that you're going to want to be, places that you're going to feel accepted and feel very comfortable and want to stay. And Philippines and Indonesia are definitely going to be on your top 5. Costa Rica and Mexico is high up there too, by the way. if you're looking at that side.
I've actually heard really good things about Mexico, believe it or not. I've heard really good things about Mexico. It kind of gets a bad rap in the news from an immigration standpoint as far as what's going on at the border right now. But I've heard just incredible things about Mexico. Well, that's interesting. I think the Philippines are there's. I'm very bullish on the Philippines. Obviously, you're right there in BGC, one of my favorite places in the Philippines.
You know, the interesting stat about the Philippines is this. It's such a strong growing population where a lot of the countries around the world are actually declining. When I first moved here, it was like 100 million. Now it's 120 million.
120 million. The average age is like
25.
25. Wow. Yeah.
25 is the average age. So you imagine all these new up and coming first time home buyers. So that's going to be a big demographic shift, and the population and the GDP has been growing quite strong. It's been one of the fastest growing economies for the last, God knows how long, a decade or so. And so it's bringing people out of poverty, and people are going to start, reaching that lower middle class range. And so that's where it gets interesting.
Yeah, while we're on the topic, how's Bong Bong doing? Yeah, how is he? El Presidente.
It's funny in here in the Philippines. I don't really fully understand politics here because I'm not Filipino, but it's interesting because you just every time there's a new president, there's just big shifts that happen.
It feels like Marcos is, first of all, there's a crazy history with what's going on with him. If anyone knows Filipino history with Esmelda is his mom, I think. And her husband, President Marcos, in the late 80s, early 90s, he's actually buried here on Oahu. Or he was, and it may be reinterred. I can't remember what all has happened, but it's been crazy. But he's very plugged in with. I know he's plugged in with China, and I think that's probably been a big part of the investment, but. It just feels like he sort of had the eye or had the plans to really open the door for investment into the Philippines, which I think, I could be wrong, has opened the door. That's why they're building the giant bridge out there. They're building they got a bunch of big giant projects right now, land expansion. What do you think? Do you think that's a good thing?
So you got to understand the history, like you said, a little bit, right? And the interesting thing for your audience in Hawaii to know, and they probably already know this, is that 25% of the Hawaiians out there are Filipino, and they come from the local north region during the time when you guys needed help for the sugar cane. You guys were Philippines was exporting labor to Hawaii for the sugar canes, to harvest sugar canes. And this is all the locals region, which is where Imelda Marcos, Imelda is not Ilocano, but Ferdinand Marcos is Ilocano. And so when they got exiled in the Philippines, by the way, when they were ruling, they were ruling right during or after the golden period of the Philippines. At one point, the Philippines was considered like the prestigious country in Asia to travel to. A lot of celebrities were. Do you remember Thriller in Manila was here in
Thriller in Manila? That's right. Ali
Frazier.
Yes, that's right.
And so Manila was actually a kind of like a star-studded place to be actually at one point. And so, and then after that whole thing that happened, and I don't know everything about it, but I think they got exiled and they were considered one of the biggest, if you look at the history, they were considered one of the biggest theft in history. Their grandparents. Right. And so they took a lot of money from the Philippines, and I think they had a 747 that went to Hawaii or something. I don't really know the full history. Anyways, fast forward to today's time.
Son, Bong Bong is the son. Bong Bong is Ferdinand Marcos' son, who... The crazy thing is there was a coup to overthrow Ferdinand. Right. And literally, we're going to drag him out in the streets had he not escaped in a helicopter or whatever and gotten to the airport and left.
Right.
And
exactly.
It just blows my mind that Bong Bong has come back and just has been reelected.
Right. and now he's the president. And
Yeah.
when his family did good things too. They built a lot of infrastructure projects and stuff like that.
Yeah.
From what I understood.
Yeah.
And so who knows if they're gonna kind of push that forward now that he's the president. I'm sure he's gonna want to leave a legacy and a good name here, and they're going to want to run again. Their family's going to want to run again, and it's just the way politics here in the Philippines work. You just, as a foreigner, you just have to understand it. I mean, it's not something you really can get involved, and it's just something that you just need to understand how countries work. And I promise you, there is corruption in the U.S. too. It's just it's just much more elegant, and people are just much more. I don't know. I don't know what you want to say about that.
It's not as evident in the United States, in my opinion, but it absolutely is here. Yeah, I think it's interesting that Ferdinand Marcos was so heavy on infrastructure because, like I said, I mean, you had Duterte before, right? He was sort of like the Filipino Trump, is what I like to, he was just a hard hitter, called it like he saw them, made no bones about his policies and his issues. I mean, he really helped cut down in the country of the Philippines, cut down on the drug trade, cut down on some of the Muslim issues that were, the issues that they had down in the South with, the terrorists and whatnot. I mean, he was really a hard-nosed guy, and so obviously when he termed out, it was funny because I was watching because my wife is Filipino, right? And so I'm always, and I've been in the Philippines a bunch. I've traveled over there a lot, and anytime I travel somewhere, I always try and pick up the flavor of kind of the bigger picture. Like, okay, why is the culture this way? Why is the political climate this way? Just kind of understand it. So I kind of did a little bit of, reading, a little bit of learning. And I was of the mind, whenever that election happened, I forget the name of the gal. There was a gal that was running against Bongbong. I don't know if you remember who she was, but she had she was sort of like a female version of Duterte. And in some ways, but she was much more civil, much more nice, but she had fairly right-leaning, conservative sort of bent to her, if I can use those phrases to describe the Filipino political scene. But I was, my wife loved her. My wife was like, yes, yes. And I kind of did some research into everything. And I had seen how sort of Bongbong had been like sort of raised up and he'd like defeated all these people. And I was sitting there scratching my head thinking, okay, how in the world can the son of what was essentially a dictator, which is basically what Ferdinand became, because he was like president for like 20 years or something like that, right? Like, how can his son like come back? And the only assessment that I could make or take from my reading about it was that essentially he was on the take, or the election, the barangays were on the take. I think I could be wrong, and that was how sort of he got back. And then it's like wasn't there like some of the news channels were actually shut down? There was like one or two like major, like, what is it?
Yeah, Duterte shut down some stations. I think I don't know about the Marcos, but I remember Duterte shutting down a station for a while, I think.
Yes, I think it was CBN.
And there were some news publications that had problems as well. So yeah.
Which is
but the thing is, it's not just whatever is on the take with the Marcos administration. It happens under every administration.
I agree.
And so in the Philippines, it's just much more apparent and in your face, and compared to the U.S. or anywhere or Europe. Obviously here, that type of stuff happens from top to bottom, and other. You look at all the countries that's been colonized by Spain, for example. They're all the same way, right? So it's interesting to see the swings that happen. It's not that much different that happens in the U.S. politics, right? Where you go extreme left, extreme right, extreme left. It's just like before Duterte, you had a president that really appealed to like the upper classes, right?
Yeah.
And then Duterte came in and he's like, well, I'm the guy who speaks
for the people,
the everyday guy, right? And so he gets elected.
Joe Sixpack.
And the stuff that you hear, it's almost like you can't make this stuff up. It's quite interesting and kind of entertaining at the same time. And so, like, same thing happens in U.S. politics, right? It's happening in many parts of the world right now. It's interesting to see it when you have that global perspective.
Yeah, I feel like Bong Bong was plugged in sort of at some higher levels from from an economic standpoint, and so that sort of opened the door for, I feel like, increased relations for Philippines with China, which has in turn increased the infrastructure build out. But again, I mean, it's still going to, in my opinion, help real estate overall. And again, you throw in all the different cultural factors like you talked about, like the population growth, the average age of the worker. The Philippine peso is not exactly strengthened, but there's inflation has happened, and definitely the cost of living has gone up, which could be sort of on a secondary construed to associated with strengthening of the peso. But it's been fascinating for me to observe. But I'm bullish on the Philippines, and Bong Bong or not, whether or not I agree with the dude's politics or how it happened or what.
Did you know there hasn't been a market? Did you realize that there hasn't been a market correction here in the Philippines, not a real one, since the 1997 Asian financial crisis? It's been on a bull run for that long. There was a blip after COVID, right? Or during COVID, there was a blip, right?
Yeah.
But that happened everywhere, but it's been recovering since. But ever since the Asian financial crisis, has been on one of the longest bull run. So a lot of people here think it's overpriced. People here think it's overpriced because there's not that much liquidity in the market too, by the way. So that tells you something. The Philippines, people think the Philippines is a poor country. The Philippines is not a poor country. There's just a big disparity between the rich and the poor. But there is a lot of money in this country, actually. There's a lot of resources in this country.
I agree. And then if you bake in a 20% population growth, like you talked about, from 100 million to 120 million in what has it been, 5 or 8 years or so, whatever that number, it tells a completely different story than a place like Japan. Switching gears a little bit, how do you feel about talking some U.S. politics? You want to go into that a little bit?
I'm not totally up to date. I'm happy to talk to you about it, and you can maybe inform me. Some of the stuff I've been outside the U.S. for some times, and I hear this stuff. I'm like, that can't be true. This isn't really happening. And I go back, and it's really happening. So it's
crazy. I have a conspiracy theory about the election that I think is really kind of, I don't know. So I think that Donald Trump and his policies were really good for the U.S. During the time that he was president from 2016 to 2020, we were in record-setting growth. Real estate. He really set things correct, in my opinion, for the bull market that happened going into when COVID happened, in 2020. And so, 2020 happened, and how in the world did Joe Biden beat Donald Trump, who was easily one of the most popular presidents we've ever had? Just blows my mind. And then so now here we are 4 years after the fact. We're about to have another election in 3 weeks or so. And dude, everywhere you look, there are Trump supporters everywhere. And I live in what we call in the U.S. a blue state. Hawaii is actually a blue state. But from a real estate standpoint, from a business standpoint, I don't love everything that Donald Trump does. He's, whatever. But from a business standpoint, he did a lot more than what we have seen in the current administration. And so but here's my conspiracy. Okay, I think no matter what, how many people love him, how many people are going to vote for him, how many Trump signs you see everywhere. I truly believe that in 3 weeks, we are going to have a contested election. It's going to be drawn out. It's not going to be quick. It's going to be drawn out. And then ultimately, I think what's going to happen is Kamala Harris is going to be the next president of the United States.
No, don't say that. To me, and I think a lot of people are saying this too, this is probably one of the most important elections we're going to have.
I agree.
And this is actually kind of scary to me. Like after Biden, everything that's happened under Biden's watch, and then Kamala comes in and continues that, if she continues this trend that we're going in the US, I know I'm going to pull out. I'm going to sell all my assets and pull out of the US. You know, I have my golden pass. I have my golden visa set up in Portugal. This year, I should qualify for my Portuguese passport. I have a choice to renounce my U.S. citizenship.
Wow.
And if I do that, and I'm doing that for various reasons, for tax reasons is one, because I don't live in the States and I'm always obliged to pay U.S. taxes. But that's one. I can handle that because I'm a real estate investor. I can offset a lot of the, taxes with that. So I can deal with that. What I can't deal with is just the uncertainty. Like as an owner, the trend isn't in your favor, especially when it comes to long-term tenancy laws and rules and stuff like that. And it's becoming hard. It's going to become harder and harder to make a profit on real estate, to make money on real estate, right? And so those type of policies are really going to affect us in real estate, right? So that's kind of a scary thought. You take a lot of risk as it is, right? Mm-hmm. In COVID, I didn't get a single penny. I still paid my mortgages, right? And so so this one's important for me. I don't agree with everything Donald Trump says either.
Yeah.
But I know in terms of if you're in real estate, if you believe in the foundations of real estate, I think he's going to uphold that a lot more. And people need to know what they're getting into. Like if you're going to invest in something, especially in real estate, that's a 20, 30 year investment. It's a legacy investment. You need to know what type of policies are going to be in place that you can count on, right? And what are the fundamental values and principles that drive these policies, right? Yeah. And so it's going to be scary for me. Like I think if that happens, I would probably sell all my U.S. assets.
I absolutely hope I am wrong. But it's funny, when it happened in 2020, when Biden beat Trump, I was never will forget it. I was sitting at a Chili's with my buddy Brian. There was a group of us that were sitting around, and this is back when I still drank alcohol. I don't drink alcohol anymore, but we were sitting there drinking a beer, and I told him, I said, dude, I will bet you $100 that in 2024 there will not be a Donald, because I think this was right after Donald Trump had announced that he was going to run again or what. And I said, I'll bet you $100 that he's not. So I pray that I have to pay that $100 and that I lose that. And I actually have been pretty open with it about my friends and stuff.
It takes a lot of guts to say this on a podcast too. Right?
I know.
Half your audience is gone, right?
Yeah, I know. Right?
Mine too, right? Just saying this is it's so divisive now. It's and then half your friends are probably gone, right? It's crazy.
Yeah. But I don't know. That's why I said it's a little conspiratorial and a little controversial. And I just think Donald Trump will be a good thing for real estate investment, will be a good thing for the economy. And if we don't, man, it's going to be scary. But you know what's interesting? I actually have he's a client as well over on the Big Island. Well set up. He's been investing in apartments and done a lot of stuff since probably 20, 30 years. And he's a very interesting guy. I love him. He's a big no debt guy. So he does everything in cash. And he's loved this market, the stock market, the equities market in the last 18, 24 months. I mean, look at the S&P 500. It's just been on a consistent growth. Yeah, we've had a couple of blips, but I mean, he he's been just making money hand over fist to the point where, although it's funny because we just had a change in the laws on the Big Island yesterday. So he was texting me yesterday. By the way, Big Island now allows 3 ADUs on one single property as of yesterday. And so I think that's going to change the dynamic in the Big Island. But he and I were, he's an awesome dude. We shoot texts back and forth and we're always, talking about stuff. Like we were riffing about the Tesla show last night. But he's been on a tear with his market, with the stock market. And he's like, dude, I don't know if real estate's worth it. He's like, I've been doing, so he thinks Kamala's going to win and he's pulling for Kamala. And he's like, man, I look at the market. He's like, that's all I need to care about, cause he's an interesting guy. He's more like a libertarian, but he's more like just what's helping me kind of today, what's going to help me in the 18, 24 months. And so
he makes a good point. I mean, that's a good question. I've actually asked myself that too. Is U.S. real estate worth it? Going forward? I mean, because we're at such a high. I mean, how much more upside is there going to be? Cash flow is going to become tougher and tougher with tenancy rules and laws and stuff like that. And then short-term rentals are going to be. It's just the trend for that. That's always going to get tougher and tougher everywhere we go. What's the play? What's the play in U.S. real estate?
Private equity. That's right? Probably the biggest play. And I think, honestly, private equity has been one of the biggest contributors to, well, first of all, so much consolidation. Secondly, they're using artificial intelligence to come after major industries and through investments. Do you know how the National Association of Realtors just went through this big issue back in August where they had to change the way that realtors actually are able to restructure everything? Did I tell you this story about how that happened?
No, what happened?
Okay.
You don't actually know the whole story of this?
So I've been in a course. I'm working on actually international investing. So I'm getting my CIPS, Certified International Property Specialist, basically to help service international investors more. And it's a year-long, like every other month kind of deal. We'd go for a day. And the instructor, his name is Ron Phipps. And he is the former National Association of Realtors president. He's a former president of the NAR, right? The NAR is a fairly weighty lobbying organization, and we've got like some 1 or 2 million, I forget, realtors across the country. But anyway, he's a former president. Super nice guy, easy to talk to. He's in Delaware. We're having a conversation. I don't know if I should attribute them to this to him or not. I might be getting in trouble.
Well, you already started, so.
I know, I started. Sorry, here we go. Well, he doesn't, let's just say he doesn't know for a fact, but he spelled out a few things which were very interesting to me. So if you understand private equity, you understand the BlackRocks, the State Streets, all these huge companies, BlackRock especially, they've accumulated so much. I think BlackRock has more assets under management than like 3/4 of the globe now. We're talking trillions of dollars that they have, and they're using artificial intelligence to deploy it. Okay. Well, this is actually, this is from what I understand, this is true. The forum or the court, the district in Missouri where this National Association of Realtor lawsuit was brought happens to be the same place where Roundup settlement. I don't know if you're familiar with Roundup. It's a chemical made by a company called Monsanto. And they had this huge lawsuit back in, I believe it was the 90s. And they basically, it was in this exact court. Okay. So that was a huge one. Again, it was pro-consumer and it was good, but it was a big monumental settlement. You know what else was also handed down? Another major lawsuit from the 80s, again, pro-consumer as well, but happened in the same exact courtroom. You've heard of the big tobacco Philip Morris. Do you remember that name?
Yeah.
Also in the same exact venue, the same exact courthouse. Now, these were like decades ago, okay? Somehow there was a private equity and again, this is my guess, but they're using artificial intelligence to sort of figure out how, number one, what industries they can go after and change and invest in, and number two, where they can generate the most ROI. There is a law firm that received allegedly $20 million to find a class, okay, a class of people, which the class that they found happened to be home sellers in Southeast Missouri. That's basically because that's where this whole thing came from. All right. So they spent $20 million with a law firm to basically ambulance chase, because that's how a lot of settlements happen. Law firms and lawyers will go out and they'll basically get class members to say, oh yeah, I didn't have any say so in the amount of money that I paid whenever I sold this house. Well, actually you did. It's just you didn't know to ask the question. You weren't sophisticated enough to, whatever. I mean, I don't say that in a negative way. It's just that's the reality of doing business. Yeah. Sadly, so many consumers, when they're doing business, they don't necessarily understand all the things that come with them. And especially when you're talking about the largest investment in your home, in your life, which is your home. I mean, for most people, right? But this law firm, or what I like to say is, I feel like private equity identified that one of the really good forums that they could use for a return on their investment is the courtroom. And so they invested $20 million with this law firm that had done the Roundup deal and had done the Philip Morris deal, basically landmark settlements. They established a class with, I don't know what the size of the class was in Missouri, but it was large enough for them to have, a suit that they then pursued the National Association of Realtors. Well, fast forward to what happened in earlier this year, February, March of this year, is that with treble what's the word I'm looking for? Treble damages. Okay. In law, like typically if there's a lawsuit that is awarded to a party, typically you can have, depending on the industry, depending on the nature of the lawsuit, you can have treble damages, which is essentially a 3X on the damages. Well, it was essentially around $1.5 billion. Okay. Would have sunk the NAR, the National Association of Realtors, would have gone bankrupt. It would have gone away. It wouldn't have happened. There would have been no money to be repaid to the lawyers, because there's just not that much money exists in the National Association of Realtors. So what did they do? They went to the back room and they settled. Okay. So the National Association of Realtors ended up settling with this class for how much? A third, basically 500 million, a little over 500 million. Well, John, if you've ever worked with a lawyer, or you've ever had to pay a lawyer, or you've ever been involved in any lawsuit, what are the typical fees as a percentage that law firms charge or take from settlement?
30%. 1 third. Yeah, 1/3.
A third.
Yeah.
What is 1/3 of 520 or five? Yeah. What's 1/3 of 500 million?
Probably 150, 160, 160, 70.
Somewhere in that neighborhood. Yeah. So 160, 100, I think it was like 170, 180 after all was said and done, because I think it was like 520-ish or something like that. Right. Yeah. Basically, we'll just say 160 to make the math easy. So what did they do? They invested $20 million in a law firm to go after a class to build a class, establish a class, disrupt an industry that didn't need to be disrupted. And what was their return? From 20 million to 160 million, an 8X return in a matter of less than 24 months. Private equity.
Are you serious?
So that, my friend, is allegedly how this thing got started. Because here's the deal. If you look at how real estate has been done, okay, first of all, buyers are not typically, it's been established because over 40 years, it's like any market process. The market normalizes, the market gets efficient. The market always obtains efficiency. Well, that was essentially what had happened over 4 decades, is the market sort of achieved efficiency so that buyers have representation, but yet they don't have to pay because they don't really have any equity. The asset is the house. They're going to buy the house. They're going to take on a large amount of debt to buy the house, but that equity is on the seller side. So it made sense from the seller side to just say, okay, well, we're going to give a small amount I mean, half actually of the commission will go to the buyer's agent so that the buyer can be represented and then the seller can be. It was working fine, right?
But the buyers can still, for example, in Japan, right? Well, I have to, as a buyer in Japan, it's standard for me to pay 3%, and the seller pays his brokers 3%. So in Japan, it actually works that way, and that's the industry standard. But everywhere else, it's like that. In the Philippines, it's the 5% split two ways, and so I mean, can the U.S. adapt to something like Japan? Is that possible?
Here's the interesting thing is I think Australia also does it similar to Japan. And I think Canada also does it similar to Japan. But here's what's happening. Now we are in October, September, basically almost 2 months, almost 8 weeks in, 7 weeks in at this point to the actual ruling and because it went into effect on August 17th. So here's what we're finding is happening. You know what's changed, John? Nothing. And here's why. Basically, sellers, the rule is now you can't publish what your seller commission is going to be or your buyer. Yeah, you can't publish what it used to be called a cooperating brokerage fee. It was published in the MLS. You can't do that anymore. So what does that mean? Well, when we sign listings, it's not a wise business choice in the US if the culture has always been for that buyer. And again, we're talking residential. We're not talking commercial, right? We're talking residential. But if it's always been that way, that's just how the market sort of is. And, there's a reason why they give new buyers, first-time home buyer incentives. You give all these tax benefits to people that have never bought before so that they can buy a house. Well, most of them, their money's going into the purchase, not let alone to have to help fund a real estate agent to help them. So what's happening, John, what we're seeing is sellers are still doing the same thing. They're basically saying, okay, I'm going to give 3% to my buyers out of the deal, and then it just has to be quote unquote whispered. So what was in my opinion, a consumer friendly approach has now become less consumer friendly because of the settlement.
So are sellers still selling their home at 6% or 3%? I mean, that's the question.
Yeah, they're still doing it at 3% or 2.5%, and they're doing a 3% or 2.5% concession. It's called a buyer's concession, which then will be credited to the buyer at closing, and then the buyer then has to. And that's the other weird and awkward thing about this whole deal is we've got to have a conversation with.
So let's say you sell my house in Hawaii, right? And so I agree to pay you 2 or 3%, whatever the seller commission is, right? And so what you're saying is most likely there will be a concession that if a buyer's agent brings in a buyer, I would have to pay an additional 2 or 3% to the buyer, or I'm not only if I agree. Okay.
Only if you agree to it. Now for this property, for your Sharks Cove property, it's more of a commercial play. And that's why we're focusing on our NOI. That's why we're focused. So it's going to transact as a commercial transaction more than it's going to focus as a residential. Okay. But yes, for residentials, but here's the thing. If you, and again, I just saying this hypothetically, but if it was a residential property, I would advise you to absolutely still pay the buyer's agent a buyer's concession, because otherwise what's happening is buyers are calling me up as a listing agent. They're saying, hey, because it can't be published anymore. So they're asking, hey, what's your seller's concession to the buyers? It's 2%, it's 2.5%, it's 3%, whatever it is. All right. And then they're like, okay, but if I say, oh, sorry, we're not giving any, they're going to be like, all right, thanks. See you later. Good luck selling that house. And then they're going to take their buyer elsewhere.
Let's talk about this. This is an interesting topic, right? Because here's the thing. Well, yeah, here's the thing though. I actually, in a way, I kind of like it better for me, right? Because let's say if I sell a property, in all honesty, even when I go buy a property now, because I went through all that period, that crazy bull cycle, I don't even have my own buyer's agent anymore. If I see a property, I just go on Zillow, I go on the MLS. If I see a property I like, I contact the seller's agent directly. And I'm hoping the seller agent will, one, make sure I get the deal. Two, have room for a rebate on the commission, right? Or lower the commission because he doesn't have a buyer's agent anymore. And that way I save money on the deal too. The seller saves money, I save money. It's a win-win situation. We cut out the buyer agent. I'm happy with that as a buyer or a seller.
100%. And so, but here's the distinction is, let's just say Sergeant Smith, who's never bought a house before in his life, and he doesn't know everything about a home like you do, right? And he comes to me, he's swimming in the deep end of the pool.
Right. So yeah, for someone like him, for sure, like it's your first time, it's not worth the risk. Just pay the 3%, right? Because you need somebody on your side to make sure all the, but in the US, I mean, it's hard for the seller agent to get away with shit too. It's because honestly, I mean, there's a lot of protections in places in the US.
Well, there were, but some have gone away now because of this very thing. Because it used to be that it was published. So now it's weird. I represent buyers too. I represent mostly sellers, but I do represent some buyers. And I had a conversation with a guy 2 days ago. He was a developer's broker, and we were talking all about this deal, and we were talking all about this stuff. And I just, I didn't open with what's your brokers, or are there any seller commission or seller concession? We have to use the word seller concession.
Right.
And so I was asking the questions. So he knew in my mind, and these are great clients, and they're probably going to buy in that building. From all the questions that I was asking him, he was like, oh man, this is, I get to the end and I'm like, oh yeah, what's your seller concessions? And of course he's a broker, and, so it's not his first rodeo. And he's like, that's a good question. He's like, I don't know. I think it's like 1% or something like that. You'll have to check to my agent that's going to do it. And I was like, I mean, it's, for me, it's no skin off my back. It's not a big deal, but it's just like, it could be better or worse for the buyers, because if I have an agreement in place, because that's the other thing that's really weird about this is buyers actually have to put down a percentage that they're going to pay their agent, okay, day zero. Like before they've even not gotten to know the agent, before they've even gotten to work with the agent, they have to fill out a form saying, here's what I will pay you. And so we've even had some things that have covered, that have developed around that. Like, for example, my brokerage, what I do in my brokerage for our agents, I tell them, I say, hey, we sign every single buyer's agreement has 3% on it. That's what we do. Okay. Somebody doesn't want to agree to it. That's fine. We don't have to work with us, but we do 3%. Because to represent them, it's not, I mean, dude, you spend a lot of time, energy, effort, and money to help somebody buy a house. But what I tell them is, I say, hey, if you decide, or if we get into a deal and the seller concessions are 2.5% or 2%, do you think me as a business owner is going to hold them maybe a first-time buyer no, absolutely not. So there's an amendment, so you can amend every contract. And so that's what I do. So that's kind of the way the market is sort of developed. So it's really no different than it was before, so to speak, except for the really savvy sellers that are more in the commercial space. In the residential space, it doesn't make sense, because if you do have, an unsophisticated or non-knowledgeable buyer, right, you want them to be represented, because it is not like it is. And if they aren't, 100%. they're asking for trouble. So anyway, just
That's
a couple things.
Yeah.
But
I agree. I think it's going to be dependent a lot on the market too. So, we're in a different cycle now. So it's not going to be as easy to sell these properties as before. So if your property is sitting on the market for a long time because you can't get a buyer's agent to bring his client on, then you have the interest to up your commission to make the sale, right? But if the market is in the other way around, and it's like any seller can sell anything, and it's super competitive.
The funny thing about that, John, is it's always been that way. believe it or not.
Yeah.
It's always been that way. It's just never been in the news or in the headlines like this, but it's always been negotiable. Both sides have always been negotiable. It's just people.
That's interesting.
Yeah, people just didn't realize it, So, but it's good. I like to talk about it,
That's interesting that this was a BlackRock play. I didn't know their business model is monetized off of class action lawsuits, right?
Dude, there are a lot of them. Insurance companies have a target on their back, and so that is one of the biggest. And not only are they, they're sponsoring them. They're literally sponsoring lawsuits to go after big business and big industries. And it's just the new normal. And so it's I hate that phrase, but it's reality. It's sort of the new, whatever du jour. It's the thing du jour. And then that is private equity going after big business using the courtroom. And it's an unfortunate thing.
Yeah, I mean, and another issue, if you wanted to build a business in the States, and this is a huge thing. This is a huge risk you got to deal with, right? And that's tough. Yeah.
So, but there's always, it's business goes on, and it's there's always workarounds. I'm a big free market capitalist guy, and I truly believe that the dollar, the capital, the market speaks. The market gives, the market takes away. The more value you add to the marketplace, the more you're going to receive from the marketplace. I truly believe that in a lot of ways. And so that is one good thing that is, in the US, in my opinion. I can also tell you though, why our politics have gotten so crazy too, but I'll save that one for another day. But I'll just say
we definitely need to talk about that one, because I don't fully understand it.
Yeah. It involves term limits. It involves the lobbying system. Those two things are the reason why our political.
So we call that in the Philippines, we call the lobbying system like legalized bribery or legalized.
That's what it is. In the U.S., it's legalized bribery. That's literally what it is.
Yeah, it's legalized corruption, basically.
Yeah.
We call it corruption here. You guys call it lobbying. So
yes, exactly.
Right.
Exactly. Well, yeah. So. Here's the short one. It's basically, there's no term limits. So these senators end up staying forever. Okay. But what do? They write checks, or they write policy after they receive the checks, they write the policy, which helps the lobbyists, those industries or companies grow. The lobbyists write more checks. The senators create more legislature that helps those industries, which grows, which keeps them in office. And it just gets worse and worse and worse and worse and worse. And then you have, what we have today, which I think term limits, the decision to not have term limits was, I would postulate to say the decision to not have term limits is easily what is ultimately will cause the downfall of this country, in my opinion. Sadly, and I'm a red-blooded, flag-waving U.S. But that's I think we're already on that path, and I think that's the biggest thing, because private industry has so much control in Congress, which writes the laws, which just helps private industry, which means these corporations just get bigger and bigger and bigger, and they control. So
what about all these government agencies that were formed?
Oh, yeah.
How about the funds they have, right? And the funds that they have access to, right?
Oh, yeah.
Man, it's crazy.
I could riff on it for a long time, man. It's been fun, dude.
Another one of these.
Yeah, for sure.
I went from real estate to politics. The thing is, you know what though? What I've learned throughout my wisdom, throughout my career in real estate, one freaking hard lesson I've learned is pay attention to the politics.
Yeah,
understand the politics, because you can kind of see what the writing on the wall. And when you're making a real estate investment, you got to have a 20, 30 year outlook sometimes.
Absolutely.
Right? And so you better pay attention to the politics, right? So
yes.
I think it's important.
And no, I agree. And it's like planting a tree. You want, buying real estate is very much like planting a tree. And so you just want to find the perfect location that has the best environment to help it to grow. And sometimes the seed grows, sometimes it's stunted in its growth, sometimes it blossoms. I agree with you. And when you look at the political environment and the cultural environment, all those things are going to have effects.
The better thing to do is look at it like a monopoly board, right? And so if you turn this whole thing into one giant game and system, right? Real estate is what funds local governments, right? Through tax dollars, right?
True.
And if you think about the powers that government have, they have the power to start wars. They have the power to force you to use their currency, and they have the power to give you entitlement to land, right? And so those are it's hand in hand. You have to understand. If you really want to understand one, you got to understand the other.
That's true.
I think people who are in real estate, who are heavily invested in real estate, are probably the people who are going to care the most about politics.
That's true. Yeah.
Right.
That's a good point. I like that. Wars, currency, title. Title. That's genius, man.
Because what are we really buying anyways? We're buying a mental construct. We're buying a mental construct that this land belongs to us. And it's the government that gives us that right? So anyways. And they have the power to take it away, just like other communist countries. So you better trust the politics. If you're investing in any country in real estate, you better trust the politics. You better align with your principles.
That is true. First quarter of next year, I think we're going to see a lot of groundswell activity, irregardless, at least in the U.S., irregardless of what side wins. I really think there's a lot of people right now that are just holding off, sitting on the sidelines, waiting for the decision to be made for that foot to drop, whether it be the left or the right, whatever it is. They're just waiting for it. And then once it happens, then it's going to be a path, a knowledgeable path for the next 4 years, ideally, And so I think the first quarter of 2025 is going to be a pretty big quarter in real estate, in my opinion, in the US,
Yeah, so. Especially if Trump wins, right? So
yeah. If Trump wins, dude, it'll be a whole new time. I mean, you see what Elon Musk is doing now with Trump?
Yeah, he's campaigning with him, man.
Dude, have you seen the
smart tech guys are doing it too? And Joe Rogan is behind him, because you can't trust the media anymore. So
is Joe Rogan? Did he put his weight behind Trump? I didn't see that.
He's always been doing that for years, even way before this election.
Yeah. Elon created a super PAC. And if you go to the Twitter handle America, I mean, how basic is that? That is the Twitter or the X handle. It's America. And it's a super PAC. And get what he's doing, dude. He is paying people $30 an hour, which is still a great little wage for people in the US, to canvass swing states and get signatures of commitment that they will vote for a president, and they don't name Donald Trump, but a president that is pro closed, or basically all the things that Donald Trump stand for, from an economic standpoint, from an immigration standpoint. It's like Donald Trump doesn't not want immigrants, he just doesn't want illegal immigrants coming in, And so literally, if you go onto Elon Musk's Twitter page, you can see he started, it's basically a super PAC, and he's literally paying people in Pennsylvania, Ohio, all these swing states to go out and he's giving them $47 for every voter commitment that signs up. Not registration now. He's not paying them to register because that would be illegal, but he's paying them to get them to commit to it. So it's almost like he's using Soros. You've heard about George Soros. It's like he's using the exact same.
Wow. Yeah, why not? If you have the money, right? I mean, what's better than money? Influence and power, right? So
yeah, that's crazy. Yeah, right on, dude. So it's been fun, John.
That was a great talk. Yeah, absolutely. We got to do it again soon.
Perfect. I like it, dude. Let's do it, man. Let's do it.
I'm definitely going to have you on my podcast too. So let's do that soon.
That sounds good. And maybe we can even do like an Instagram live or something sometime if you want.
For sure.
Yeah.
We'll do.
All right. Well, I guess that's a wrap, folks. Thanks so much if you stuck around to the end, all 1 hour and 31 minutes of us rambling. But this has been fun. I've really enjoyed it. Thank you, John, for coming on. And check out john.dang808. Is that what it is on Instagram?
No, it's John Dang 808.
Okay.
And and also join our Discord because we can continue the conversation there as well. So I'll send you the link and you can post that.
Perfect. Are we going to post this on Discord?
Yeah, I'm going to post it on Discord. If you send me that's with your permission, of course.
Yeah, of course. Absolutely. I'll send it to you, man. Yeah. So if you're watching this on Discord, thanks so much. We'll see you in the comments.
Great.